Hello everybody, welcome back to another episode of CoinLogic TV. I am your host, The Logical Dude. Today we're going to be talking about one of the most popular trading indicators used in Bitcoin trading, really stock, Forex, anything, but we really focused on Bitcoin trading here at our channel. So whether you are a seasoned trader or you are brand new to the game, understanding how to use moving averages can really be a valuable tool in your arsenal, or what we call a playbook. So most other indicators that are out there that you're going to see on like TradingView or anything like that, they base their metrics off the moving average. So it's pretty fitting that this is the first indicator in our Trading for Beginners series. So if you like to have the complicated world of trading broken down into simple terms, then you know what to do right now. You need to please like the video and subscribe to the channel so that you don't miss any more of our videos. It really helps support us. So now that you've done that, wait, you did do that, right? All right, cool. Like, all that kind of good stuff. Subscribe. Great, cool. Then let's move on and talk about moving averages. So what is a moving average? So a moving average, it's basically just a measurement of an average value of a given data set over a period of time. All right, so for instance, you are looking at a daily time frame. All right, each candle is 1 day's worth of action. The moving average that you turn on, say you set up a 20 period moving average, that's going to measure the price over the last 20 days, and it's going to follow, and the line's going to follow the price like that. So it just really kind of smoothing things out for you. All right, so it can be applied to the price of an asset to really help identify trends. All right, so that's really one of the main things that it's used in trading for, is to identify trends. All right, so there are different types of moving averages, including the simple moving average and the exponential moving average. All right, the main difference in the two is how they weight the recent data. All right, so a simple moving average assigns equal weighting to all values in the data set. All right, so while the exponential moving average gives a higher weighting to more recent prices. So the closer you are to the recent price, the more weight it puts on that price in its measurement. So the exponential moving average is going to move closer to the price than the simple moving average. The simple moving average is more of like a, nice little wavy line, just kind of rolls with the price. All right, so the EMA is generally faster to react, so let's get into the charts, and then we're going to talk about how to use moving averages in Bitcoin trading. So give me just a second here, and I'm going to get those charts pulled up, and we're going to get rocking and rolling with that. Over here on our Bitcoin chart, you're going to see we are on the daily time frame. I've already pulled up two different indicators. You're going to be able to do that by coming up. You're going to be able to pull up, go to indicators, and what I like to use is the EMAs. So I type in EMAs, and I use this one right here, this top one. I actually need to favorite that. And then I also type in SMAs. All right, so these are community scripts. These are not TradingView made, but what these do is they pull up multiple moving averages. So the TradingView default moving average only pulls up one moving average, and sometimes it's good to have multiple moving averages. Well, with a free TradingView account, you only get 3 indicators that you can use. So you don't want to, lose one of those indicators to an extra moving average. So this is a great way for you to be able to pull up at least 4 different moving averages all in one indicator. All right, so it's using the SMAs or the EMAs, depending on which is better for your trading style. All right, so I have already got those both pulled up here, and so what they are, when you pull them up, you can also come in here and look at the settings. Okay, so these have 4 plots on them. Each of these have 4 plots. So for the EMA, this is the 20, the 50 is the second one, the third one is the 100, and then the fourth one is the 200. Okay, so if I have them all turned on, this is what it's going to look like. And this is the EMAs, and so this is the one that runs closer to the price. All right, so you can see they've got all 4 out there. Well, that can get a little too much for some people. Okay, but it's a really great indicator to be able to see the direction of the trend. what you can do, and what I like to do, is I like to focus down on two of them. So I like to focus on the 50 and the 200. Okay, these two are, they're just kind of like the golden pair in trading, I guess. So there are a lot of trading strategies that are based on these two moving averages. And generally what happens is when you're 50, which is the orange line, this is the 50-day moving average, and then the green one is the 200. So when the short one crosses over the long average, that means you're going to be in a bullish trend. If it's the opposite direction, all right, so let's zoom back out. So here you can see where the 50 period crossed under the 200. Well, what did the price do? We went into a downtrend at that point. Okay, so generally historically, these two moving averages call trends pretty well. All right, so this is what I use on my trading charts, are the 50 and the 200, and I use the EMAs because I like it a little faster to the price. Because I do trade on, shorter time frames. I'll trade on the 1 hour, the 2 hour, the 15-minute, that kind of thing. I've kind of gotten out of my scalping game, so I'm a little more on a swing trade strategy myself. But moving averages are definitely one of the tools that I use in my playbook to help call for trends. All right, so I'm going to actually turn off. Actually, I'm going to leave on the EMA. And I'm going to turn on the SMA on top of it. So I also have the 50 and the 200 here, and you can definitely see the difference. And so I'm going to actually come in here. I'm going to go to Style, and I'm going to make these a little more profound. So let's make these a little more profound so that you can actually see them here. So you can see how you can go in here into TradingView, into these indicators, go into the settings, and you can come and change all of this up. See, the SMA one also has multiple moving averages, and you can actually set the length of what they're at here too, and then you can set the source. So this is the closing price. So this measures the closing price of the asset, okay? All right, so you can see here though, the difference in the moving averages. So this purple is the 200 simple moving average, the green is the 200 exponential. So you can see how much closer to the actual price that the exponential moving averages run to the simple moving average. So again, it all depends on your trading style and what you're going to be using on your charts. Preferably, I like the exponential moving average. But that's my personal choice. You're going to have to find the personal choice for your trading style. But that's definitely a way that it is used in trading. Probably the main way is just really more of a trend indicator. So when the price crosses over a moving average, then that's a good time to be looking for, some activity in that direction. Okay, so whether it's up or down. So if it crosses up above a moving average, then what you're going to be wanting to find is the price come back to that moving average and find it as support. That means that if it comes back and finds it as support and then lifts off of it again, and it doesn't go any further down, then that means that's a strong trend and indication that the trend's going to go in that direction. If it crosses below the moving average, that's a more bearish signal. You can kind of look at taking shorts from that point. Again, you want to see it cross under and close under a moving average. And then I personally like to see it come back and retest the moving average, either as support or resistance, before I put my entry in on a trade. That is a confirmation set that I use in my trading strategies. So it tends to really kind of help. It's just kind of make sure that it is going in the direction that I think it's going, and it gives me a chance to buy it, buy it a little lower. So I see where it's going. It's going to come back, and I'm going to, basically like the boat left, but it always comes back. And you just hop on the boat at that next round, and then you take off for the next trip. That's really kind of the idea behind it. All right. So I hope that kind of helps demystify the moving average a little bit for you. Again, two different types, exponential and simple moving average. It's not that hard to really grasp. And honestly, like I said, it is the most popular indicator in the trading world. Okay. So remember, the best thing to do though is to use it in combination with other indicators so that you can get more of a confirmation. Like I said, I like to use the 2 moving averages, you know, and crossing up, and then I like to use support and resistance. I like to use volume. I like to use stuff like that. I like to use the RSI as well. So that's another one that we're going to be talking about in our trading series. So using them in combination is going to help you have a better confirmation that you're making a good trading decision. And that's really what it's all about, is making sure that you are making the right plays for your business, because this is what trading is. Trading is a business, guys. Okay, so it's not, you know, if you look at it anything else like that, anything other than a business, it's gambling, essentially. You know, it's just, you know, putting a bet that something's going to go up or down, and that's really, you know, kind of the way you're riding it. Well, you need to look at it as a business. If you think about it as a retail business, you are trying to find Bitcoin at a good price that you hope somebody is going to buy for at a higher price. So you are looking for these price corrections to be able to come and find the demand zones to be able to scoop up more Bitcoin and be able to sell it higher later on down the road. So that's why finding these trends by using the moving average and letting it cross up above the moving average and then come back, because this way you know that the price is going in an upward trend, then this knows, that way you'll know when the price comes back, you're going to try to buy at that lower price, because it's then going to rise up, and then you're going to be able to take some profit on it later on, because that's the whole name of the game. It's all about supply and demand. The moving average is just a tool that really kind of helps you guide your journey. It's really, that's what it is. The moving average is a guide. It helps guide your journey. So I hope this really helps you out, guys. I hope you found this video helpful. If you did, like, subscribe, again, all that kind of good stuff. Really appreciate it. If you have any questions, I do like to try to answer things on YouTube if they are viable questions, that kind of thing. But definitely come and check us out on 3speak.tv. Come and follow coinlogic.online on the Hive blockchain. If you come and get involved with the Hive blockchain, it's social finance. You get to earn just for engagement, that kind of situation. It helps actually promote Web3 and the decentralization of social media. So come and check us out over there. If you come and comment there, I definitely will answer your questions there. So again, thank you for joining us. Hope you have a great rest of your day. Happy trading, and we'll see you in the next video. Take it easy, guys.